Hello everyone, this is Teddy Kekstead from Forex Trading Unlocked, and we are here on July 19th for a Forex trading and cryptocurrency trading analysis for July 19th through the 23rd, 2021. Before we get into it, let me just show you our disclaimer real quickly to remind you that this is for illustrative and educational purposes only. We'll be talking about certain sell signals and buy signals in the marketplace, and some of them happen to be high probable Japanese candlestick patterns, which there is actually a book also entitled High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly. And if you're an Amazon Prime member, I believe that you are a Kindle user. You can read it actually for free because you pay the monthly fee. So check it out, and also if you haven't done so yet, subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked. And with that, let's get to our live action screen here. We actually have the Forex Trading Unlocked YouTube channel pulled up for you here right now, and as you can see, there's different playlists, and there's also information as far as different playlists, but also from different areas that we cover. For instance, we do webinars for tfnn.com every Wednesday at 8:40 Central Standard Time, where you can see us on their website or on their YouTube channel. We also do webinars for eoption.com and the Nadex. You can see those prior videos that we've done and webinars that we've done for them. So, and also make sure that when you hit this page, you subscribe and show it to your friends in the Forex trading community. Or if you're a Twitch user, come to our Twitch channel and sign up here and check it out. So, and you can also jump on the chat there and see what other stuff we have going on. You can access the book High Probable Japanese Candlestick Patterns also from there as well. Okay, with that, no more further ado, here we have the forex-trading-unlocked.com website pulled up for you, and we're going to click the market analysis and educational navbar tab and pull up the workstation page. Okay, so there is quite a bit of shakeup going on in the markets already for just having been opened since last night, with the European markets starting off in a negative way, as well as the other currencies versus the dollar were negative also in a big way. And there's a big reversal of fortune. So we have the Euro releases for COVID deaths and stuff coming out at 1 o'clock still. We have CPI for Japan coming out as well later today, which is going to be huge. That is definitely going to probably have an impact on the US dollar yen. Then we also have, let's see, coming up this week, we have the housing starts and building permits. These are probably going to be positive numbers that are going to help to kind of give people a positive spin on the economy, but these are all lagging numbers. I would not take too much stock in those. Then we have also export numbers for Japan as well tomorrow, retail sales, and a couple other numbers for the Aussie, also New Zealand dollar. And then let's see, M3 for, that's kind of big for the US dollar Swiss. Then we have the Wednesday numbers. We have the crude and other different commodities in the energy sector numbers that come out. Those are going to be very big to watch as far as crude stocks. Then we also have bond auctions coming up as well. And then let's see, Thursday, what do we have on Thursday? ECB deposit rate. That's kind of a number that could shake up their interest rate market a little bit, but we'll see. I don't think it's going to really impact the euro too significantly. We have jobless claims in the U.S. That's definitely going to be a big number. Then we have consumer confidence in the euro. That's a big number also coming out on Thursday. We have another auction as well coming out on auction Thursday for bills. Let's see. Then we have tips auction. And then we get to Friday, retail sales for the UK. That's going to be big. Then we have, let's see, for Germany, the market comp flash PMI. That is going to be a big deal. And also for the euro, that PMI, that's definitely going to have an impact, I would think, on the early morning trade for the euro, as well as for the British pound as well. Then we have PMI, obviously, going on for the UK as well, the same day. And let's see, then we have what else? That would be it. Okay, so we have some big numbers that are coming out this week. Let's expand this chart, get rid of this volume here. All right, now I think you can see the chart pretty well. Let's move it over. As you can see, the Euro US dollar made a lower move low today and now is only slightly unchanged on the day. So the trend is your friend. We are still in a bearish market for the Euro US dollar. Obviously, we've had a little rebound this morning. This is probably due to the fact that we're having a big bond rally and a big sell-off in the stock market. So just to give you kind of an idea, let me check this out. So futures are always in a lag. 30-year Treasury bond is up just over 2 handles. It's $2, $2.2 and 4 ticks. They don't have pips, they have ticks in the futures markets. Why are we talking about this? Well, interest rates are a function of the currencies. So since the 30-year and 10-year are obviously in play, just to give you an idea, this market was making some nice highs last week. So this would be, remember, this is in a lag. So this is Friday. So overall, the market was higher on the week, and now it's trading at 165.30. So if 165.30 puts it all the way up at, well, that's 166. Because 165.30 is only 2 ticks away from, because there's 32 ticks per dollar in the bond market. All right, so that means that bond prices are going up. That means that interest rates are going down as far as in the relationship for what that goes. That also means that the value of the dollar is getting a little bit stuck today. So let me put this into perspective so you can see this. Okay, so let's move this down. So 165.28 I think is where it was at. 165.31. Okay, so just a few ticks away. So that's where the market is trading at currently. So that means that this market here has rallied all the way up to where this yellow line is right here. That's a big move in the bond market. So that is causing this pressure here. This is where the sell-off is, because right now, let's see, it's 11, so 10, 9, 8. Yeah, this is 8:30. So the bond market opened up, I mean, synthetically was trading electronically overnight, but technically it opened up this morning at 7:20. Here is your bottoming area here for the dollar. So this is when the dollar was strong this morning. It had been breaking and breaking and breaking, because here is this how the day started. Here's the 19th. So all morning long, it's been breaking and breaking and breaking. The bond market opens just before the stock market, which was already lower overnight because the European market started tanking. So now here's the thing is, as interest rates are going down, that makes the value of the dollar less. So by having this type of valuation here, that's why we're getting this nice recoil for the Euro US dollar. So remember, the trend overall is bearish. However, we came off of making lower move lows and lower move highs, made this low here, and then boom, we took out these highs here. So this is a big deal as far as neutralizing the short-term hourly trade. Does that mean that we're bullish in by any long-term way? No, not whatsoever. This is a reaction to how the week is starting off so far. So that's where we're tracking as far as dollar strength and dollar weakness. Let's go on the daily here. So you can see the range obviously was bigger than Friday. Friday was pretty tight. Even bigger than probably Thursday too, yeah, by just a little bit. So, but it's still lower on the day. It's coming off a lower move low. This is in a bearish trend. So the only way that we start to get bullish this market, which is going to be hard to see that happen in the short run right now. So if we get above 118.55, that would keep us on the neutral stage. I wouldn't be very, very bullish until we get above this area, this high here, which is 119.76. That's a ways to go. That's 2 handles. We could be there obviously in a day, but I don't think that's going to happen. I think right now we're still in a sell rally forecast. Remember, overall, we're still coming off of a lower move low on the daily and the weekly chart. So in fact, let's go to the weekly. Pull this up. So as you can see, we've been grinding lower and lower. I mean, this is the key low to watch out. And if you look at this, we have a head and shoulders on the monthly. And we're kind of riding that wave right now. So if you look at this long term, here's your shoulder. Okay. Then we have our head up here. We've already had our second shoulder over here. Okay, so if you guys are with me, you can see that we have the classical head and shoulders where we had come off this high, made a higher move low, made a higher move high. This becomes the head, made a higher move low, which could be lower, doesn't matter as long as you come down, and then we have this lower move high here. So this definitely helps to support the direction of a potential new bearish trend in the longer run. So we still have to take out 117.02. This is the big barrier to cross. If we fall below there, that takes us out onto weekly lows and multi-month lows, setting us up for lower trading action. So we're kind of riding some key support here, and on the day it looks like this market wants to turn around a little bit. So we'll see how things go, but right now I would say be very cautious with this one. On the hourly basis, we have this last low from the previous hour. We're about to roll into the noon hour in Chicago time. It's 11:55 right now. So this is back from 10 o'clock this morning. So $17.94 is critical on the hourly base. So for your aggressive bulls, I would say this is where you want to be long against. Any failure from here, it's not that much risk. You see you have this upward sloping support line. That's holding the trend intact altogether. Trading below there has the head and shoulders formation really starting to rule the direction of the euro US dollar. So I would be mindful of that and look for a rally to sell more than a break to buy with this market. I think we're seeing a knee-jerk reaction right now to the stock market sell-off as the equity markets are getting just hammered right now. People are buying bonds. It's flight to quality. Flight to quality also comes in the form of the dollar, but it's not coming into it right now as far as with our major components being the euro and the pound. So the euro right now on the hourly basis is a short-term neutral to potential bull. Otherwise it is a bear on the daily and weekly and even on the monthly right now. So we'll watch these key levels here. So the biggest thing is short-term aggressive bulls above 117.94. We're looking for this market to hold and make a run for 118.55. Below 117.94 takes out the support line here, which is the neckline, keeping this head and shoulders intact. Trading below that definitely has us in a bearish way. So now let's go to the British pound US dollar. Talk about slamming some lows today, huh? This one's still hanging on its lows. This is very key as far as what's going on with the British pound. Unless we get above $1.39.14 up here, this market is definitely secure in a bearish turn right now. The lockdown measures going on across Europe and also around the rest of the world have this market spooked. So there's those, remember we looked at those numbers coming out on the economic calendar. Those are going to be crucial in helping to find whether we get some support, and this is the end of a multi-week sell-off, and it was just, maybe this was just a correction. If we don't start to find some support and these numbers come out bleak, then we have a full-blown I wouldn't say crisis on our hands, but we have the ability to take this market a lot lower. So let's go to the weekly chart. As you can see, the trend has been positive for a very long time, coming off of this low from March of 2020, and this market has been channeling higher, making higher move highs and higher move lows the whole time here. We butted up here against a double top. I think what was here, the high was 142.41. This is 142.50, so we just made a slightly higher high right here. You could even say that this is almost like a head and shoulder here, where this is a shoulder, exaggerated spike. Here's a head, and then here's a shoulder. This would be your neckline here, which we are now trading below. So it's kind of big as far as on the multi-month scale, that This could be viewed as just a correction, just like this was a bigger correction here. It very may well be. And we are hanging on key support because this is where these lows were on the monthly, or on the weekly, excuse me. So, and we are trading just on that number. So below 136.64, this market starts to run into some trouble. That starts to look like we have an acceleration of the downward trend. So the daily, as you can see, we tagged that line. There's a lot going on here, but you can see as far as the support, we're having trouble here. As far as resistance, this new downward resistance seems to be more in play and more of what you need to pay attention to than the support right now that was holding up the market for quite some time. On the hourly basis, this thing continues to make lower move lows and lower move highs. I would use caution. This, unlike the euro, it is giving you at least a short-term recoil, and that's another one where those levels are tight. Not looking for much to the upside, and it's easy for that to turn back on support. But right now, like I said, once again, with the bond market up like it is, let's see, now it's up to 165.31, so it's up another couple ticks. So yeah, that has us looking at the dollar getting a little bit pounded in some respects, but not in all respects with every market. As you can see, obviously the dollar is doing well right now. So the euro is where it's had the recall. So the dollar index is a little bit mixed when it comes to that. Now let's, oops, sorry about that. We don't need that up. Okay, so go back to the daily. All right, so we've made lower move lows. Where is our price targets? Well, as far as upside right now, we do not have one. We're looking for a reason to at least put the brakes on this slide, or give us a signal to really have a reason to buy this market. Otherwise, we're looking for rallies to sell into. I would use this downward sloping resistance line here as a key area. So, and since we can see how it's noon right now, we're about to roll over the hour now on the trade. We are right on this line. Pretty interesting stuff, folks. So yeah, I think it's very likely that this is going to continue to trade lower, especially if the bonds and the 10-year continue to slide. So in fact, we can go look at the 10-year rate. So the 10-year is plus 0.67. Yeah, so it's up 28 ticks. See, that's not up as much. It's kind of crazy. So yeah, the long end of the curve, which dictates the interest rates in the long run for sure and drives the momentum of interest rates, is putting pressure on rates and also putting pressure on the currency markets. Pound being one of the ones, though, is not getting dollar weakness. It's actually getting dollar strength. So very interesting how the second biggest component, Euro US dollar, where the euro has stabilized and is only slightly lower on the day, bouncing back. We have the British pound on its knees. So this will be interesting to see how it goes. This momentum is key. We'll see how it pans out at the end of the session today. Sorry about that in the background. I turned the volume off and all of a sudden it starts ringing. What do you know? US dollar CHF. So here we have the Swiss market. This is interesting, and also it's considering, this is a flight to quality currency, basically unchanged on the day. It's been up, it's been down, so this one here is not really reflective of all the volatility that we've had. I think this is a mixed bag of goods here. As you can see, no matter what, this has been in an upside correction for a month and a half. We're coming off a higher move low. This will be the key for you as far as direction. So for aggressive bulls, this is our risk here at 91.17. A failure from here would confirm lower move lows after a lower move high as well. So we can use this as our downward sloping resistance line. If this was just a correction for the US dollar Swiss, meaning this move up since the middle of June, then we may have capped out. We could have a potential head and shoulders here, where here is the neckline, and as you can see, here is the shoulder, and then here is the head, and then here's the other shoulder. It's kind of a tight one, kind of a Quasimodo head and shoulders. So, but head and shoulders nonetheless. As far as how far can this one dip down, if we use just basic Fibonacci Gann analysis, We put down a horizontal line at the 50%, which we're just hovering above, and the 0.618. So I think the 0.618 is probably a viable price target as far as downside, because should we take out these lows, I would think that we're going to go more than just a couple pips, because this is 91.17 and this first target is at 90.98. You're only looking for 19 pips there, which I think should we make newer move lows, it'll be just a little bit harder than that. But yet this would be a good area to bounce if this is the beginning of the longer term downtrend, which is the US dollar Swiss bear. So we'll see. I don't know if this is just going to be a short-term correction. Remember, we originally were looking at this upward move as a correction. So we're not necessarily very bullish the dollar in the long run, and especially with the interest rates going higher like they are doing here, that means it's very unlikely that the US dollar Swiss is going to go higher, and more likely it's going to come down and test support. So but for your aggressive bulls, if you are long, 91.17 becomes your risk level. Anything below here, I think you're really on the wrong side, for one, because the longer term trend is bearish, and even the short one now on the daily and the hourly has become a bearish trend. So use caution as far as being a buyer or being a bull. So being a bear right now, I think you have a good risk level too to ride this wave lower. Should this be the case, we look at the high of that last shoulder, 92.69 here is your risk level. Only above there do the bears really get pounded, and we start to view this no longer as an upside correction, but the beginning of a longer term uptrend, meaning bullish the US dollar Swiss. So we have some divergence in the European currencies. As you can see, the pound is getting just hammered. The euro was earlier and bounced back. This one really didn't get hammered, and now it's actually gaining strength, or trying to gain strength versus the dollar. In fact, let's look at the hourly real quick. Yeah, this is like the inverse of what's going on with the euro. This one peaked out when the bond market opened up or started trading and started railing. And here we go. Yeah, dollar weakness is in play. So I would key off of probably on the hourly this high from 2 hours ago, only above 91.87 would I say that we get back on the rally train. Anything below that, I think, keeps this market in check and looking for a further test of support. So that would definitely be that. I can just get rid of this on the daily. Okay, so we have some key pivots there. Looking for this market to definitely pound support a little bit more. Now let's go to the US dollar JPY. This one was holding up this morning for a little bit, but then it just sagged, and now it's trying to come back. Now this is what I think is coming back because of how the other markets are reacting. Usually there's a knee-jerk reaction in reverse when it comes to the US dollar yen. So meaning that while there's strength coming into the euro and even the Swiss and some other currencies versus the dollar, since the bond market's railing, they have been getting relief, meaning that they're gaining strength versus the dollar, at least in the short run on the intraday. But the opposite happens for the US dollar yen, meaning that there's divergence to go in the opposite direction. So while earlier today the dollar was strong, it was weak versus the Japanese yen, and now that the dollar is starting to show some strength, especially versus the pound and some of the other currencies, now it's starting to show it again in the yen. So we'll see. I think that we, besides obviously planting a lower move low here, overall this we've been calling this sell signal here that we had a couple weeks ago to be the beginning of a corrective move to the downside. We are not bearish to US dollar yen overall, the long term. And as far as how far can we go, well, let's see where we're at. So the 50% level is right there. That was a very good support base, and 0.618 is right there. So look at these numbers. We have hit them to a T. Boom, hit that target, had our nice little retracement to the upside. Boom, come down, hit this one. Harmonically, we are in place. So I'm going to, at least for the short run, see, we know that this trend has already been taken out, obviously. So, but that doesn't mean that we're not establishing a new low and then we start to trend higher. Remember that we had this slide here. Why wouldn't it be that we could have this slide here? We could still even have a little bit more room to the downside. I'm not trying to call a bottom here, but we have found a harmonically nice spot to stop. I would say we're probably going to run into a little sideways traffic before we start to hit lower levels. And if we take out this high from yesterday, or excuse me, from Friday at 110.37, then I think you'll have an escalated rally, as buying pressure most likely is going to start to come in a very big way. The reason being is that the overall trend is bullish for the US dollar yen, and right now, like I said, especially if the dollar is in play and getting hurt versus a lot of currencies because of the bond market and the 10-year market, it's going to probably act in the reverse for the US dollar yen, just because there's a divergence in the way that they react. So it's kind of weird. So when the dollar is a bear versus many other currencies, it's a bull versus the yen, and vice versa. But even still, long term, especially with the potential of new COVID lockdowns again emerging in numbers, and pandemic things starting to come back into play, if the COVID trade comes back, it's not going to bode well for the US dollar yen. For the yen, for the US dollar yen, it probably will accelerate the trade higher. If you look at the weekly here, we had a nice sell signal 2 weeks ago, and now we're coming down into this little spot here. Overall, this trend since the beginning of 2021, it just kept on going. So even when we had a reason or a chance to slide back here, we couldn't do it. There's just been too much strength. We've been riding the bull for all of 2021. Now we did come through here. This gives us our short-term sell-off, short-term correction, but look at how long this one lasted. 1, 2, 3, and then 4. It was positive and just came back up. This is the longer-term trend over here that we saw during the COVID time, and then we started to have a little light at the end of the tunnel. Now I think we're going to go back into like this sort of trend here for a short run, and then we're going to go back up to the upside, meaning that we're coming out of this a bull when it comes to US dollar yen. A lot of it has to do with inflation and costs for oil and a bunch of other things that are artificially holding up dollar strength versus just the yen in this situation. Australian dollar, US dollar, this is an interesting bird. No matter what, this is a bear in all markets. The Australian dollar, US dollar, we have a head and shoulders here that had occurred. The trend overall for this market, due to fundamental and political factors and geopolitical factors, is a bear. I do not see this thing being anything but a sell rally market for probably the next 3 to 6 months, if not 12 months. Weekly bound, you can see how this has been in a bullish trend since March of 2020. It kept going and going and going. It peaked out a year later, which is just this past February. We tried to hold up here, and then in May was making a run through at resistance. It failed, and ever since has not looked back. I think that this is probably over the next 3 to 6 months going to get down to 65, maybe even all the way down to 60 even down here. This isn't a free fall. I'm just telling you, you got to watch out and be mindful of that. Being a bull, don't try and catch a falling knife. If you got a signal, jump on it, but keep your stops tight and be careful. New Zealand dollar, US dollar is not quite in the same position as the Australian dollar, US dollar is. I think that in the short run, while dollar has strength because of flight to quality and some other reasons, except for on the daily basis today because of the stock market sell-off and the knee-jerk reaction that's going on, I think the New Zealand dollar, US dollar could still batter support a little bit. It is in a short-term bear market, but otherwise overall it's neutral over the past few months. This doesn't have all the same problems that Australian dollar has, so meaning that if the Australian dollar could sell off severely, this, if it does sell off, isn't going to sell off severely. This could also rally very easily versus the dollar, whereas the Australian dollar most likely is not. The New Zealand dollar, US dollar right now, obviously hitting support. You got to watch this as you're hanging on these lows, but you can see how what is pretty firm support Overall, if the interest rate market keeps on going down, meaning bond prices and 10-year prices going up, and the dollar gets to another slap in the face again, like happened earlier today, then the New Zealand dollar, US dollar might settle back into the middle part of this range up here. I would key off of, on the daily basis here, I mean, it's range trader's delight. And I'd be careful because you may not get much follow through here. But obviously these highs here at 70.44, and then I would key off of the low from a week ago. So around 69.20. In between here, you can see this is already a choppy trade. It has been for the past month. Use caution. There's just, you don't want to force a trade. I'm sorry, there's not really too many setups for you today, but we're going off of existing trades and signals that are come to fruition, and now we're trying to see how things are going to pan out. We have a lot of crazy volatility going on. Now, speaking of volatility rising, US dollar Canada, here is the bull. This thing, talk about a reversal of fortune. We were on the corrective menu already for this thing for the past month and a half, since we started out with these lows here. We had a nice high probable Japanese candlestick pattern here, just a bullish engulfing line that has this market correcting back to, now remember, this market's been in a free fall since March of 2020, and they got really no relief whatsoever. So 0.618 and the 50%. All right, so these here give us a yield and a nice little pocket. So if this US dollar Canada is really going to have a longer term trend, then our first target really is this $1.3340. However, we have a lot of ground to cover before we can do that. And on the monthly, it may look bullish, and on the weekly, it could be just a correction. So that might be what's going on. We came out of the long-term downtrend over here. We had those buy signals. We've rounded out this bottom, but I would use caution as far as us being able to get up to $1.3340. That's a big move, and dollar strength, like I said, especially with the rising bond market, that's a tough call. So I would use caution. If you're long, keep your risk under management, and definitely be mindful of raising your stops. I would use caution selling into this right now. First, I would wait for a signal to sell. Remember, the overall trend is down. US dollar Canada, there's a lot of geopolitical reasons between the United States and Canada that kind of set us up to not have a reason to follow through with this rally. So it's a tricky trade. I think one of the reasons you have this explosive rally to the upside right now is not just necessarily because there's so much buying pressure. I think you have a lot of stops that got set off, or you have a lot of weak shorts that are trying to play and sell into this move, and it's obviously not working out for them. So, but it's not necessarily because of dollar strength, because remember, we're looking at these other markets and it's really not there in a big way, except for in a couple, obviously, like the pound and the Australia, and now we have the US dollar Canada. It's like, geez, we gotta be kidding me. So BTC USD, let's get to some cryptos here for you. Oops. All right, good old Bitcoin remains in a slump right now. It's really bearish on the weekly and on the daily. It's grinding support. Right now, I think, as well as since with the COVID thing coming up as well, that you're going to have a little bit of an issue during the next week or two to see how things are going with that. It's very likely that we could dip down back to the 28,000 area. I don't think we're going to have a major sell-up below that, but I think you're looking to base more again in that upper 28,000 area, and then come back up to trade up around this 30,000 to 32,000. Not expecting any major breakouts to the upside anytime soon. ETH USD, Ether on the lows today, trading lower from the last few sessions. Definitely trending lower. In the short run, however, technology and interest in this seems to be growing and solid. I think this is a dip to buy. BTC, I looked at the Bitcoin, I look as kind of like the dollar index and sets the tone for the sectors, or sector, if you will, for the crypto assets. Ethereum right now, I think, is one of the key dogs that wags the tail. I think you can equate Ethereum to like the euro, if you will. So not necessarily, in that it trades like the euro, but as far as the size and weighting, if Bitcoin was an index, Ethereum would be one of the biggest weights in that index. So the technology, once again, is very embraceable and expanding and has lots of uses. So this is probably a dip to buy. I think you're going to find fair value somewhere around 2,500 up to 3,000, probably in the next month and a half to 2 months. I don't see it really rallying in a big way unless there's a huge breakout in Bitcoin, but it's very likely that we are basing here and getting ready to grind higher once we start to get into the end of August into September. Now let's look at XMR US dollar. Monero also lower. This is tight, and this is where I think you're getting some value with things like Ethereum and also now Monero. So like, while Bitcoin is really riding its lows, they're selling off, but not as severe, and they're showing how they're getting tighter and tighter and tighter as far as their daily ranges. And I think that's because you have more and more interest in the technology for the longer run. So it's basing, and it's really hard to find people selling it as far as on a value. If people are looking at these things as a store of value, the value is there. I would say the value is more than where it's at right now, especially in the short run over the next 3 to 6 months. There's no reason not to think that Monero has a chance to get up to 320, somewhere even up as far as 400 by Christmas time. Is it going to explode to the upside like it fell to the downside this spring? Probably not. I think that you start to run into problems with things like Ethereum and Monero, that they do have a value and are perceived as a store of value, but as far as the technology and the cost, if the price of these things gets too high, the cost efficiency of these things becomes inhibited. So I use caution with that, but long term we're a bull. By the way, we are long all three of these that we've discussed so far. Doge US Dollar, let's pull this one up here. This one here is in the doghouse as well. I would be very careful with this one. Besides smelling like a Ponzi scheme, acting like a Ponzi scheme, it will probably turn out to be one. The asset itself, as far as a store of value, is very questionable. The technology is not very embraceable. It is more embraced by the people who are into the meme and pumping it up than the reality of what value does it have in the long term. So as far as value and technology going hand in hand, I think if you have another run up again, it can go to thousands of dollars a Dogecoin, but I don't think that the technology is there to support it, nor will it be embraced in the future to have any view that it might be able to sustain it in the future. So at least that's the way we're perceiving it right now for that particular crypto asset. Doesn't mean that this thing, like I said, could go to the moon, but I would use caution. I remember just a few months ago knowing lots of people who weren't even in the crypto assets saying, oh, if this thing gets back down to 30 cents, I'm going to buy it. So I know there's a lot of people probably that were buying it between 30 and 35 cents when it fell off of its highs. And I remember how it did bounce around there. There was a trade, buy it at 30, sell it at 40, 45. And if you did that, there was a nice scalp that did last for a while because there was a lot of interest. But if there's not interest at 17 cents to really get this thing back up to a higher level, I don't think this is just laying on support because the whole industry is laying on support right now. This, unlike Monero and Ether and even Bitcoin, its viability in the long run, it just isn't there. So it has the earmark of being able to tank and actually get much lower than it is now, and is more likely to do that than it is to appreciate in value. So be very cautious with this one. I actually have some from some payments that we has for services, so I own a very small amount, but it's all like 43 cents, something like that, just under 45 cents. and believe me, if it gets back up to there, I will be liquidating it. So right now it's not that big of amount of money, so just forgetting about it, and we'll see what happens. But yeah, get a bunch of people to buy this, why don't you? So no, I would be careful of this one, as far as if it wasn't that we took a payment and we're just figuring that it was a good deal to sit on it at 45 in case it really did go to a buck or two, which it still could. We could see an explosive big move to the upside in Bitcoin. It just catapults all these other markets. If we start going into this COVID conundrum again, remember where we were. See, last year this thing was tight, then all of a sudden it happened the beginning of this year, and boom, 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 boom. So if we do go back and do a COVID thing, who knows, maybe there's going to be a lot of people at home again, a lot of people getting their little PPE, whatever, or excuse me, they're not their PPE, their extra money, and they'll be throwing it at a little bit at the Doge, just like everybody already did in the crypto sector over the past year. So let's go one more look at the Euro US dollar. And as you can see, the dollar is gaining some strength back today at lunchtime. So it looks like all the bears, the dollar bears, took some profits, and maybe they're getting ready to growl again. British pound, US dollar, coming off those lows. Yeah, see, it's a little mixed. US dollar Swiss, very neutral. US dollar JPY, yeah, that's coming up, getting some strength there. AUD USD ain't happening. Yeah, that's just hanging on its lows. US dollar Canada, yep, that's hanging below its highs. This is the anomaly. I would use cautious with this one. If you're a bull, ride it out. Good luck with this one. I wouldn't chase it though. I'd be very cautious. If anything, look for a dip to buy. If you're a bull, then to buy into these new highs. And be very careful if you are selling into it. So if you haven't done so already, make sure you subscribe to our YouTube channel, Forex Trading Unlocked, and check out our little playlists and things that are going on here. There's all kinds of information in past videos, lots of great content, and also easy access to eoption.com and tfnn.com, or areas where we produce webinars and have interviews on a weekly and monthly basis. Lots of great information. And also we have our Twitch channel as well you can check out, and that would be cool also. So either subscribe on one of the channels or both, depending on if you use both venues and platforms, and make sure you pass it on to your friends as well. And if you haven't done so already, make sure you check out the book, High Probable Japanese Candlestick Patterns. You can learn how to trade some of those signals that we already pointed out to you that are going on a monthly and daily basis for the currency markets, and we'll see how they impact things, and you can learn how they do by reading the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And we will see you soon. This is Teddy Keckstedt from Forex Trading Unlocked. You have a great trading day, and also be very profitable and fortunate